Right, let's talk now about something that has been playing out for many, many months now, and something that I don't particularly understand, and that is quantitative easing. Quantitative easing is a phrase that we throw around all the time, and it's being indulged in by the central banks of Japan, notably recently, and also in the United States of America. The US Federal Reserve has been chucking $85 billion a month at the market. But what does it mean, and what impact might it have? We know it's boosting the stock markets. In the studio with me, the financial director and also portfolio manager at Myton Optimal, and that's Joanne Bainham. Quantitative easing, QE, what is it? When they say that they're throwing $85 billion at the market, the US Federal Reserve, what are they throwing it at?
Well, it's also known as money printing, as I think most of you guys will know, but it actually means that the central bank buys assets from banks. So they'll hold a loan book, mortgage-backed securities, for instance, one of the examples, and every month they go out there and buy these things. But that's just the thing, they don't have any money to buy it with, they just press a few zeros on a computer somewhere and hey, wow, there's more money out there. Nothing new's happened, no new productivity, no new jobs have been created, no economic impact, it's just more money in circulation.
So it's just boosting Wall Street, and it's boosting
Yes.
primary dealers, and it's boosting the balance sheets of banks, in theory.
That's right, and the hope is that if their balance sheets are in better shape, and listen, US banks are in far better shape, the financial markets there have really turned around, there's the hope that they'll start lending money to small and medium enterprises who in turn will create jobs in the economy. That's the hope. In fact, what was much more interesting was happened yesterday with the ECB. As people know, they cut rates yesterday. But what was most interesting about their comments, they talked about potentially negative deposit rates at the ECB.
In other words, that you have to pay the bank to keep
Yes.
their money.
And so what they're trying to do, look, it's not happened yet, but they're talking that they might do it. What they're trying to say is, don't give us any money, please go and lend it to people. We don't want your money, we want you to lend to companies so they in turn will employ people. They're desperate to get money out into circulation, because exactly your point about Wall Street, they've got all the money, but they're not actually creating any jobs out of it. It's just making better margins, nothing else has changed.
So there's a two-speed sort of financial system, if you like. There's Wall Street and primary dealers and high-frequency traders, etc. And then you've got Main Street in the United States, for example, which is just still struggling along. I mean, to create 119,000 jobs last month in the United States of America in the private sector, it's not enough. It's simply not enough to get that unemployment rate down in the States to 6.5%. So at some point, they've got to say to themselves, it's just not working.
Look, it's not working, but it doesn't mean the stock market can't go up, as your point earlier. The fact is, the man in the street's no better off. In fact, if you look at things like Gini coefficients in the US today, I think are as bad as they were in the 1930s. So essentially, if you're very rich in America today, you've never had it better. Interest rates are virtually zero, you can do what you like. But if you're the guy at the bottom of the pile with no job, it's never been worse for you. So yes, it's tough out there, but this is a gigantic experiment. I think one of the better comments I heard this week was from El Harin from PIMCO saying, central banks are basically pharmaceutical companies putting big drugs in the market that no one's tested. And that's the fact. We don't know. There's a massive experiment taking place at the moment. None of us know how it ends. But you can't just keep printing money and hope that it works, because at the moment, it's dubious.
But we might only know in about 10 years' time what the effects were, because he says it's a giant experiment. But for the moment, everyone's taking this money and it's being pumped into the stock market. The S&P last night going to an all-time record closing high. The Dow Jones an all-time closing high. The Japanese market has, okay, it's taken a bit of a stall this week, but 45% up since November. So it just seems also artificial, and at some point it must end in tears somehow.
Look, I think there's no doubt it's going to end in tears at some point. I mean, as I said in a comment we wrote to our clients this week, global financial crisis 2 is probably going to happen, because central banks are actively encouraging investors to take on leverage. You just have to look at the dividend yielding stocks in the US today are on very high PE multiples, and probably will go on to higher PE multiples, because there's no yield in the world, because central banks have forced yields so low down the curve. But it does end at some point, but it might carry on for another couple of years. Even Rubini, who's probably the biggest bear in Wall Street, said this might happen another 2 or 3 years of this. I mean, Bernanke this week said, I'm going to increase or decrease. I'm going to do what I like. I'm just going to keep pressing buttons on my computer until you guys feel better about the world. It's ridiculous. It doesn't work necessarily, but it does debase money, which essentially is what we're getting as asset inflation. That's what we're getting today. S&P rising on thin air is asset inflation. It doesn't mean it won't continue.
The US Federal Reserve said exactly what you've just said. They said if things get better, we'll sort of ease back with our quantitative easing. If things get worse, we will continue at the same pace and if not do more. The ECB has said more or less the same thing. I'm just surprised that the ECB has taken so long to go from 75 basis points down to 50 basis points. And it looks as though there'll be another 0.25% in 2 or 3 months' time.
Look, I think the monetary mechanism in Europe is broken. It's not working. The peripheral countries, their spreads might have narrowed, but it's not working in those economies. You've got massive unemployment. I thought what was more interesting in the comments that came out yesterday, he can cut rates again. I don't think that will be the big game changer. The big game changer is on austerity. And even though Draghi came out yesterday and said countries must stick to the austerity plans, he did go on to say, but I'm not so sure if that's the correct way to go about it because they've increased taxes. He said what they should have been doing is decreasing government spending, but instead increased taxes. And he's saying it's not working. He can see the central bankers can only do so much. Governments have also got to step up to the plate and help out. And you can't have it. I mean, I think the Pope tweeted something about it yesterday as well, saying that people haven't got jobs, they're starving. If you are unemployed, a 25 basis point decrease in rates is going to make no difference to your life whatsoever.
No, I coined the phrase yesterday, it's a monetary symbolism. That's all it is. What's more important is the other fiscal measures that can be introduced. I mean, look what Japan has done. Will Europe do the same thing? They're not doing it in quite the same style as Japan and the United States, are they? Do you think that could come?
I think they're talking about trying to buy mortgage-backed securities, or what they call as ABS in Europe, sort of buying small and medium enterprises loans, because they have to actively encourage private enterprise to increase jobs. But they don't seem to love the idea. And I think until we've got the elections in Germany, they're not going to do an awful lot to stimulate growth. I think they're all way too terrified of Angela Merkel and what she's up to before they actually make any real decisions. Yeah, so I think Europe, is the sick man is going to say it's sick. I think Japan's got far more free rein in what it's doing.
Looking at to the more immediate matters of today, at 2:30 South African time, we're going to see the non-farm payrolls number coming out. If the market wants to go up, it'll go up. If it comes in at 100,000, they're going to say, well, that means that QE will continue because we're not creating enough jobs. If it comes in at 200,000, they say, well, the economy's going very well, so we buy the market anyway. It's that sort of mood, isn't it?
It is that sort of mood at the moment, and I kind of wonder how much of what's happening is being led by the machines, because if you look at surveys of fundamental analysts are all arguing that markets have run a bit too hard, but the momentum is definitely there at the moment, and if you have these algorithmic traders are going to continue to buy this market because the momentum's up. Back to this whole central bank story, they keep saying we're going to give you as much money as you need. They're telling you money's cheap. Yeah. They're telling you money's free. Casino-like
conditions. And the other thing that really disturbs me is that central banks are creating liquidity, and with that liquidity, they themselves are not just diversifying their currency holdings and buying gold, they're actually buying equities now. 25% of the central bankers that were polled said, yes, we're actually taking on some risk. Now, we want to buy shares. We want to be part of this party.
I think they're so desperate to create inflation in any way, shape or form that they can, because how else get rid of the debt mountains we have in the world unless inflation comes back? So they're desperate, but I mean, it's a bit ridiculous. I also think that survey, they did say the bigger central banks weren't doing that. I think the US said they were going to buy equities. I think it was Israel came out and said they were going to do the same.
And the Norwegian energy fund or something.
That's right. Yeah. So I think they were less or smaller banks, but I think Japan's been talking about it for a while, that they'd be buying equities. And what I find is most interesting, what's happened in Japan the last couple of weeks, is that despite the central bank saying we're going to print as much money as we can, local Japanese people have been bringing their money back home because they're suddenly so bullish about their own stock market. So the central bank is desperate to get their currency to weaken, and yet locals are bringing their money back home. It's sort of it's not really working.